Bitcoin then dropped sharply from 83k to 78k, hitting the low 77k range before a slight rebound. The Nasdaq's decline was historic, with Apple shares plunging 9%, whipping out $443.5 billion in value. Warren Buffett criticized Trump tariffs as economically wrong and stockpiled cash. The current market collapse isn't just about Trump's tariffs, though they are a big part of it. A major issue right now is the wave of margin calls hitting Wall Street. But MicroStrategy, or Strategy, the biggest corporate investor in Bitcoin, has just reported a massive $5.9 billion unrealized loss for the first quarter of 2025. But here is the interesting part. They haven't bought any Bitcoin since March 30. Well, that's my take. Short-term bearish to long-term bullish potential. Bear market is here! And welcome to today's video. Do you remember when I said things might get worse before they get better? Well, we are in it right now. Markets are going wild. All three major indexes opened deep in the red. The Dow dropped as much as 1,700 points, following by even worse losses in global markets. Meanwhile, traders are scrambling for answers. If you look at the fear and greed index, it's deep in fear territory. And we are talking peak anxiety across both TradFi and crypto. Bitcoin tried to hold the line, but as macro pressures intensified, especially with Trump doubling down on tariffs, it finally cracked, triggering a chain reaction of liquidations. So, strapping, because we are seeing some of the most aggressive market movements since the last financial crisis, and it's shaking up everything from Wall Street to crypto. Let's dive in. On Friday, as the US Nasdaq collapsed, Bitcoin briefly held steady near 83k, sparkling hope of decoupling from traditional markets. But optimism faded quickly after Trump reaffirmed his commitment to tariffs, saying, "We have to endure it." Bitcoin then dropped sharply from 83k to 78k, hitting the low 77k range before a slight rebound. The Nasdaq's decline was historic, with Apple shares plunging 9%, whipping out $443.5 billion in value. The Wall Street Journal reported institutional investors selling Apple due to tariff fears, as 90% of iPhones are made in China, and now face a 34% tariff, potentially raising prices to $1,300. Wall Street insiders also acted ahead of the crash. JP Morgan CEO Jamie Dimon sold shares earlier this year, raising questions about his foresight. Warren Buffett criticized Trump tariffs as economically wrong and stockpiled cash, which now seems justified as both crypto and stocks continue to collapse. Today's market show both Bitcoin and US stocks under immense pressure. Bitcoin remains tied to traditional markets during macro uncertainty, and the Nasdaq is falling at a rate not seen in nearly 100 years. Key levels for Bitcoin are 75k support and 83k resistance. A break below 75k could trigger further downside toward 70k. When even Buffett is hoarding cash, it's clear stormy markets lie ahead. The current market collapse isn't just about Trump's tariffs, though they are a big part of it. The tariffs have added a ton of uncertainty and volatility, and that has kicked off a wave of panic selling across global markets. But there is more going on behind the scenes. A major issue right now is the wave of margin calls hitting Wall Street. Hedge funds and leveraged investors are being forced to dump their positions as asset prices fall. And it turns into a nasty loop. Prices drop, margin calls get triggered, which means more selling, which means price drop even more. It's the same kind of liquidation spiral we've seen in crypto during big crashes, and now it's happening in traditional markets too. As those leveraged bets get wipeouts, the downward pressure just builds. Investor sentiment isn't helping either. Fears of a recession and sticky inflation are making things worse. JP Morgan recently said there is a 60% chance of a recession, and that's got big names like Jamie Dimon and Warren Buffett either selling stocks or sitting on cash. That's a signal. These guys are worried about broader economic instability, not just tariffs. For Bitcoin, all this chaos means continued downside pressure. Bitcoin was holding up okay near 83k at first, but then it dropped hard with the rest of the market falling to 77k before bouncing a bit. It's another clear example that Bitcoin is still moving with macro trends. It's not fully decoupled from traditional markets yet. And what about the bottom line? Tariffs might have been the spark, but this fire is being fueled by margin calls, liquidations, and recession fears. All of these are piling out at once. If you're trading or investing, it's smart to keep an eye on these drivers. They are going to shape how both stocks and crypto move over the next few weeks. Looking at the overall picture, the Wall Street Journal reported that many top billionaires are suffering massive losses in 2025, while Warren Buffett stands alone with positive returns. The list you see below shows major tech entrepreneurs and business leaders who mostly supported Trump's return to office through donations, but they are now facing the consequences of his tariff policies. You can see the staggering losses. Elon Musk alone has lost $130 billion this year, with Bezos down $45.2 billion and Zuckerberg dropping $28.1 billion. Meanwhile, only Buffett, who worked hard to secure cash and criticized Trump tariffs, is in the green with a $12.7 billion gain. This widespread wealth destruction shows that Wall Street hedge funds are facing increasing liquidation risks. Even the most powerful entrepreneurs doing business in the US are watching their fortunes shrink due to tariff issues. The market has become a place where almost everyone is suffering losses, except for those who prepared by hoarding cash. The contrast is striking. 9 of America's 10 richest people are bleeding money, while Buffett's conservative approach has paid off. This validates what I mentioned earlier about liquidation risks and the death spiral hitting both crypto and traditional markets. Speaking of Bitcoin, let's take a look at the liquidation heatmap for recent price movements. Bitcoin's price fell below 77k on Sunday, marking a drop of more than 10% from its record high of nearly $90,000 reached last week. The price dropped from 84k to below 75k, reflecting significant selling pressure in the markets. It held onto 83k line over the weekend, including Friday, but when the news spread that mutual tariffs would proceed without notice, it continued to plummet until reaching 76k, before rebounding to 81k. This decline wiped out a large number of long positions as seen in the yellow and green zones. That's the high liquidation zones, by the way. This decline wiped out a large number of long positions, as shown in the liquidation heatmap. Key zone of activity include 81 to 82k. It's a major liquidity cluster was hit during the drop, liquidating traders expecting Bitcoin to hold above 81k. Below 75k, another cluster of liquidations occurred as the price dipped further, triggering stop losses and forced closures of leveraged positions. Bitcoin's sharp drop was triggered by panic over Trump's tariffs, which caused losses in global markets and spilled into crypto. Excessive leverage amplified the sell-off, forcing traders to liquidate positions as prices fell. Bitcoin is now struggling below key levels, with 82k acting as a resistance and 75k as a critical support. If 75k breaks, further declines towards 72k are likely. Currently consolidating near 78k, Bitcoin remains highly volatile, and traders should monitor these levels closely as more price swings are expected. So, to summarize, as the market processes these liquidation events and broader economic pressure, Bitcoin remains highly volatile. While it is consolidating near 78k for now, strong resistance at 81 and 82k pose a challenge for recovery. Traders should brace for further volatility and monitor key levels closely as the market adjusts to these developments. When you look at the order book, you can see that during the recent decline, Bitcoin broke through its previous low of 76k, dipping into the low 77k range. The buying wall has been weakening under growing bearish pressure, yet there is still notable buying interest forming between 70k and 76k, which could act as a critical support zone. As I mentioned in last week's video, the 80k level was a key line. Now it has been broken. So Bitcoin is testing lower ranges, and if it doesn't reclaim 80k soon, we'll need to watch the 78k and 76k zones closely as potential next stops. What is exacerbating this decline is the broader market backdrop. Liquidity-driven moves are playing a significant role, with intense liquidation activity visible on the heatmap. And on top of that, macroeconomic factors like escalating tariff headlines are piling on uncertainty and driving volatility. As shown in the graph, Bitcoin has blown through several key levels, and this spike in liquidation activity is amplifying the sell-off. If you look at the chart, Bitcoin dominance has climbed to 63%. This means when Bitcoin falls, altcoins have dropped even more. So, while Bitcoin is also down, altcoins have dropped even more. To make it simple, when Bitcoin goes down, its dominance goes up. It's worth pointing out Bitcoin is holding up better than the rest. Even in this rough market, it's showing more strength. In my opinion, it is because in times of uncertainty, traders and investors tend to move their capital into what they identify as the safest crypto asset, and that's Bitcoin. It has the longest track record, the strongest brand, and the most institutional support. If you have a lot of altcoins in your portfolio, that's a lot of damage. It's not just a tough spot, it feels like we are almost back to the start of the cycle. Now, let's just see what the whales are up to, shall we? I don't know if you read the news, but MicroStrategy or Strategy, the biggest corporate investor in Bitcoin, has just reported a massive $5.9 billion unrealized loss for the first quarter of 2025. But here is the interesting part. They haven't bought any Bitcoin since March 30, and that was last Sunday. This is surprising, because they've been buying Bitcoin non-stop since 2020, so this sudden pause is a big change. In my opinion, there are two possible reasons for this. One, MicroStrategy might be waiting for better market conditions. And two, the huge losses may have forced them to slow down and be more careful. Either way, this shows that even big investors might be feeling nervous about the market right now. For context, since Michael Saylor had Strategy start buying Bitcoin, the company's become one of the biggest holders out there. Just this year, they picked up about $2 billion worth of Bitcoin in two big buys. And right now, they hold 528,185 Bitcoin, worth around $40.43 billion, which is about 2.3% of all the Bitcoins that exists. So, what does this mean for Bitcoin? Well, that's my take. Short-term bearish. Bitcoin broke its critical support at 80k, and now it's testing level around 75k, 78k. Without whale buying pressure or a strong macro catalyst like Fed rate cuts, we could see further downside toward 70k, 72k. 2. Long-term bullish potential. Strategy isn't selling their Bitcoin despite these losses. That shows long-term conviction in Bitcoin as a store of value. If inflation picks up or the dollar weakens due to tariffs, Bitcoin could bounce back as a hedge against economic instability. Here are the levels I'm watching closely. Resistance at 80k. This was a key support level, and that's now acting as resistance after being broken. Support at 75k. Whales are starting to accumulate here, but if this level breaks, we could see panic selling towards 70k. Now, let us take a look at the cumulative volume data of the whales. You can see into Bitcoin's price movements, order book activity, and whale behavior over the past 2 weeks, and that's what we can tell. Around April 4th to 7th, there was a sharp decline in large buy orders at Bitcoin's price drop below 80k. This indicates that whales pulled back their buying activity during this period of market uncertainty. Also, you can see that all the orders by major buyers, except orange and green, to a lesser level, decreased during this period. However, near 75k, the orange line shows an uptick, suggesting that retail traders, rather than whales, are stepping in to accumulate Bitcoin at these lower prices. The decline in whale activity below 80k likely contributed to the sharp sell-off, as there wasn't enough buying pressure to stabilize the price. However, renewed accumulation near 75k by smaller traders could provide short-term support for Bitcoin if it holds this level. Previous support levels around 80k, 83k have now turned into resistance, as seen by the lack of strong buying activity above 80k. You can see that in red. The decline in whale activity during the drop below 80k likely contributed to the sharp sell-off, as there wasn't enough buying pressure to stabilize the price. The renewed accumulation near 75k indicates that small traders see this level as a good buying opportunity, which could provide short-term support for Bitcoin. In the short term, if whales begin accumulating at 75k alongside retail traders, Bitcoin could stabilize or rebound toward resistance at 80k or 83k. However, if selling pressures increases and 75k line breaks, further declines toward 70k are most likely. Long-term, whale accumulation at lower levels often signal confidence in Bitcoin's future value and could set the stage for recovery once market conditions improve. For now, whales appear cautious, but may step in if key support levels hold. Traders should watch whether buying interest continues at 75k or if selling pressure drives prices lower. So, we are in the thick of it right now. Markets are on edge, liquidations are stacking up, and even the whales are pulling back. Whether it's crypto or stocks, it's clear we are in a high volatility zone where every move counts. So make sure to watch those key levels. Bitcoin is stuck between 75k support and 80k resistance. If 75k holds and well buying continues, a bounce to 80k, 81k is possible. But if 75k breaks, expect a drop toward 72k or even 70k, all eyes on whale activity and macro pressure. So if you got any value from this video, smash that like button and hit the bell icon so you never miss a market update. And let me know in the comments, do you think we've hit the bottom or is there more pain ahead? Stay sharp, stay safe, and I will see you in the next one. Bye bye.